Hello, everybody. My name is Paul Buitink, and today I'm delighted to have my guest Daniel Lacalle, and to talk about tensions in the European Union, and more specifically the Eurozone. Daniel is a renowned Spanish economist and author. Hi, Daniel. Welcome.
Hi. Thank you very much. Thanks for having me.
So what's your take on the increase of the pandemic emergency purchase program going from 750 billion to 1.35 trillion this week decided by Lagarde?
To start with, it makes very little sense. You have to remember that the European Central Bank excess liquidity is already at 2.1 trillion euros. So when there is so much excess liquidity, and when the bond yields of countries like Spain, Italy, Portugal, Greece are so low, why is there a need to increase the asset purchase program? There is absolutely no problem in terms of market demand, either for sovereign or for corporate bonds. Even companies that are under stress, Renault or Lufthansa, can issue debt today at negative real yields. So the question is, why do they need to increase the asset purchase program that was already huge? We already have negative interest rates and the bond yields are already so low. And the answer, unfortunately, is in order to maintain a very elevated level of asset prices, which is inconsistent with the idea that in such a crisis as the one that we're living today, what you want to do is to help the average citizen, because what you're trying to do at all cost is to keep the financial and non-replicable good asset prices at the highest possible level. It truly makes no sense.
So why do they want to keep those asset prices high then? What's the main reason why they don't want them to go down a bit?
Fundamentally, because what the European Central Bank and central banks believe is something that has been debunked numerous times, no? Is that if the stock market goes down or if house prices go down, then that creates a negative impression on the average citizen, and therefore people are less inclined to consume, to spend, to have a positive view about the economy. It makes absolutely no sense. The wealth effect that was mentioned numerous times by Ben Bernanke in a couple of papers is simply a fallacy. The idea that consumers that have no exposure to stocks or to bonds are going to go out and buy more and be happier simply because they read in the paper that the stock market is up, and makes very little sense. But it's fundamentally because they believe that they need to keep inflation at any price. And think about it, in a crisis in which obviously the activity is collapsing, what is the problem in having lower prices that can help consumers actually navigate this crisis through a period of time? It's almost unbelievable that in countries like Italy, like Greece, like Spain, where the economy is contracting so severely, prices of goods and services are barely untouched.
Yeah, I mean, of course, if I look in Holland, there are a lot of people that have indirect exposure to the stock market via the pension funds. So if the stock markets go down, the pension markets bleed, and then the pension funds bleed, and in the end, people will also feel that. But I agree with you. It seems like they do whatever they can to keep the show on and to keep the illusion of prosperity alive. But at some point, the bill has to be paid. It's just extending.
Think about it. You made a good point. People are maybe indirectly exposed to asset prices via pension funds, which is true. But the majority of pension funds are exposed to the most desired asset that is out there. Inflows into fixed income have been growing and growing and growing throughout this crisis as the safest asset. So it absolutely makes no sense to increase the asset purchase program when the demand for bonds is actually rising. And that is what most 99% of people have in their pension funds. So actually, what you would have is, okay, there might be some fluctuations in equity markets, but pension funds would have very little impact.
So, and I think we have already used up 250 billion of the initial 750 billion, and with this increase to 1.35 trillion, they buy a few months more already ahead. So they're planning ahead, basically. What would be the consequence if they would not increase this and they would just let the original plan expire? You think it will then lead to a lot of downward pressure on all sorts of asset prices and possibly some sort of debt
No,
deflationary spiral?
no, no. Um, if they kept the previous program, which was already extremely accommodative, very, very, very expansionary, um, what would have happened? First, they would continue to buy an extraordinary amount of sovereign bonds from the Southern European countries and from all of the countries of the Eurozone. Second, they would also buy corporate bonds. Okay, remember that the previous plan already included corporate bonds. But what would, and it would not make necessarily an impact on equities the or on the perception of the valuation of asset prices. Why? Because you're already seeing it before the ECB launched this new program. Markets were already in bullish mode. Markets were already saying, oh, we're going to buy equities, we're going to buy bonds because the worst is over. The worst of the COVID-19 crisis is over, and we can look forward to 2021. Markets were already giving up 2020 as a lost year and considering what would be the impact in 2021. So there's something that does not make sense. You do not say that that equity and bond markets are improving, that there is a better sentiment, that there is a better probability of a quick recovery, and at the same time massively increase the asset purchase program. But
Yes,
also,
it's giving boost to a party where everyone is already drunk.
exactly, but I come back to the point that I said before, and I think that people tend to forget this, is that there was already 2 trillion euros of excess liquidity at the European Central Bank. It's not that we needed more liquidity. Hmm? Excess liquidity when the European Central Bank launched its first quantitative easing program was 125 billion, and it's gone to 2.1 trillion. So what is the logic in increasing massively the asset purchase program in an environment in which there's already 2.1 trillion euros of excess liquidity? See what I mean? Is
Yeah.
that even if I bought, which I don't, the argument that there is a risk of deflation. There's no risk of deflation when in the middle of a massive slump of the economy, inflation is down 0.1%. That is not deflation. So even if I bought into that argument, the point that I'm trying to make is that there's already 2.1 trillion euros of excess liquidity, that they are drowning the economy in liquidity.
Yeah, and with the previous program, not even PEPP, but the original assets purchase program, there was, of course, recently disagreement with the German Constitutional Court, and now the Bundesbank has to come up with or the ECB has to come up with analysis within 3 months to explain that everything was proportional. Is the PEPP, and especially now this extension of the PEPP, is that just a big middle finger to Karlsruhe, or because I can imagine that if the Constitutional Court doesn't agree with the previous program, I'm sure they're going to have questions with this new program as well.
The ECB has already said a few times that they don't need to change anything because they already have the response of the European Court of Justice saying that the asset purchase program was according to the mandate and the law. So to a certain extent, what they're doing is exactly that, which is in 2011, the German Constitutional Court already ruled that the quantitative easing program was unconstitutional. They continued with it and they actually expanded it. No? So I think that from the point of view of the European Central Bank, legally, what they say is that the European Supreme Court has already ruled that their actions are constitutional. But at some point, it's not about what the Constitutional Court in Germany says. I think that we are starting to see, and we started to see already in 2019 and 18, how the average citizen in the Eurozone is starting to feel the negative impacts of the quantitative easing programs. You see, for example, in Holland, in Germany, and so many other places, how the house price index is rising dramatically higher than real wages, making it very difficult for citizens to access to a home or to rent, etc. Rental prices are going through the roof, despite the fact that in some countries they're putting completely stupid rental control measures. No, all of those are consequences of monetary policy. It's not a coincidence that infrastructure, house prices, real estate, financial asset prices, equities, bonds go through the roof when you're injecting tremendous amounts of liquidity in the economy, saying that there is no inflation, yet the average citizen feels every day that the purchasing power of their salaries and the value of their savings is weaker, because it is a transfer of wealth from savers and real salaries to governments and to the indebted sector.
Yeah, and of course we see a lot of inequality as a result of ECB policy. Also something that was confirmed by the Dutch central bank through studies of their own, and that inequality will only increase since they're continuing these programs and even expanding them.
This is what I find absolutely fascinating, is that when I see in television programs or in the media, the radical left in all over Europe talking about what the European Central Bank should do and what government should do, etc. How everybody is saying what a great idea it is to massively monetize debt and hugely increase the quantity and supply of money. And at the same time, they say that inequality is a trait of capitalism when it is clearly a problem created by central bank and government intervention. It is massive statism.
Yeah. So, but then, if we conclude that these quantitative programs primarily benefit the financial sector and big corporates and people that are already invested in all these assets, then I guess that if governments distribute money directly to the people via all these compensation plans they have now to help people support during crisis, that from a moral point of view, it may make more sense to directly give money to people in smaller companies than the QE programs. Do you agree with that?
No, and I'll tell you why. Because you don't solve a problem of insanity with lunacy. It makes absolutely no sense. We know for a fact, and I explain it in my book here, Freedom or Equality talks about all these issues. We know for a fact that money creation is not neutral. It never is neutral. So it disproportionately benefits governments and the indebted sectors always, and disproportionately impacts negatively savers and real wages. So if you say, oh, quantitative easing is not working because it is incentivizing debt from governments and it's incentivizing the debt of big corporations and large wealth and asset owners, and let's do it, but giving money to the people, it doesn't work either. And the reason why it doesn't work either is because there's the evidence that it doesn't work. We have it in Argentina. We have it in Europe. The entire European Union has been created, and the reason why the euro was created was because of the experience over and over of previous currencies of each of the countries, of the inflationary and completely negative scenarios of continuously devaluing and printing money for no reason.
So
The
yeah, so you're
Italian
saying
lira.
two wrongs don't make a right.
Two wrongs don't make a right. In fact, two wrongs here make a massive wrong. That is the problem here. If you decide, imagine, for example, that you decide tomorrow to put this massive increase in asset purchases that the European Central Bank is making to directly finance government spending and give in brackets money to the people. Imagine that you would do that. What would happen? What would happen is the following. The reason why the European Central Bank and we don't see massive inflation, we see inflation in some non-replicable goods, but we don't see massive inflation is thanks to the fact that quantitative easing at least has a number of backstops from the money creation process until the inflationary pressures process that stop it from being monstrously inflationary. Why? It has to go through the banking channel. In the banking channel, it depends on demand of credit, etc., etc. Imagine that you completely take away that and you just finance government spending, any government spending at any cost by increasing money supply. What happens? What happens immediately is that the purchasing power of the euro collapses because the euro is not the world reserve currency, has never been. No. So the first thing that happens is that the purchasing power starts to fall. The second thing that happens, and this is the history of almost every monetary monetary system in the European Union before the euro. And the second thing that happens is that the vast majority of domestic citizens start to save in anything except the local currency, in dollars, in gold, you name it, because they know that their savings and their real wages are going to be destroyed by central bank policy. Furthermore, governments, when given free rein on their spending, they do it. They spend it. And they spend it like there's no tomorrow, creating a monster contraction of productivity growth because it's a massive transfer of wealth to government spending. So again, two wrongs don't make a right. They make a massive.
But how would you compensate then all the ordinary people that have not been profiting from the bad policies from the past? Like we can of course say we stop QE, we shrink government, and we have good monetary policy. But then there's still the situation that a lot of people have not been profiting from the past, and there's a huge wealth disparity as a result of previous policies. Are we then just let people get away with that, or are we going to come up with some way of compensating people that have been left out?
First, there is, in the European Union, there is a massive, huge tax system that is consistently and constantly eroding wealth from the higher levels. Yes, there is inequality, there is some level of inequality, but after transfers and after subsidies and transfers, it is not that high. So the point that you need to start with is that the taxation system in the European Union is already massively progressive, probably way too extractive, as we know in so many countries, because it is also working as a to prevent uh, job creation and to prevent investment. But the second thing is that the idea that you have created a wealth gap and that you in some form need to find a way to correct that mistake by trying to give a wealth gap back to people never happens, especially when it's basically from diluting money. The only way in which you get the people that have not been benefiting from quantitative easing to benefit from the economy is by having much better productivity, much better growth, and much better job creation. Not by telling them, oh, and by the way, here's a handout of a few euros that, by the way, don't even matter because they're being paid with debt and with reduction of the purchasing power of those same euros. You see, it doesn't work. the idea that you have inequality of wealth and that you're going to go out and redistribute that to the people that have not benefited from it, and everything else remains equal, can only be imagined by a bureaucrat. It's ridiculous. It doesn't happen.
But let's say if you have a situation where a few people actually rob other people of their wealth, then of course you would argue otherwise, because then you would say, okay, there's a legal reason to compensate the victim. Isn't it, to a certain extent, there on a macro level, there are victims and there are people who actually committed the crime to a certain extent? If you say, like, for many years we've been, well, if you look at monetary policy, maybe over the past 10 years or so, there have been a lot of consequences of those policies where a certain class of people have profited a lot at the expense of others. Because
No. This is an important factor. Not at the expense of others. Not at the expense. They have profited from monetary policy, but not at the expense. Nobody has been robbed of something that they had.
Name, for example, the corporates that are an SME company cannot profit from ECB corporate purchase program. A corporate can actually refinance itself very easily and for a good price with these ECB programs. So it's benefiting from a policy that you are against.
But I'm not saying that the policy is right. But it's very different to say that you profit from a policy than to say that you profit from a policy at the expense of somebody, or that you're taking something from somebody. That SME is financing itself today, no questions asked. There's all the evidence out there at rates that SME would have never imagined in their life. So the fact that Lufthansa or Telefonica or Telecom Italia are financing themselves at negative real rates is a fact, but it's not robbing from SMEs. They are financing themselves at rates that none of them ever would have imagined. You go today as an SME to get a loan for your business. What rates are you going to get? 2%?
Much more.
Huh?
Much more.
No, not much more. Not much more. You have to be truly in a very, very, very dire situation. It's impossible that much more when high yield is trading at 320 basic points above mid swaps. No.
And what about bailing out Lufthansa? You think that's a good plan? Or what about bailing out all these airline companies?
I don't think it's a good plan. I'm not saying, and it's not, one thing is, this is an important thing. One thing is to say that those are good things, which I completely disagree. I completely disagree with bailing out. First, it's not bailout, it's even worse. What the government in Germany is doing with Lufthansa is not bail it out. Lufthansa doesn't need a bailout. Lufthansa can go to the market today and finance itself, as you were very well saying, at extremely low rates and get all the equity it requires for a restructuring. What the government in Germany is doing is to put government money into the company so that Lufthansa doesn't undertake a restructuring program. So think about this. It is the opposite of what you're saying. It is not that Lufthansa is taking money out of SMEs. It's that the government willingly decides to put money in a company so that the company doesn't restructure, get leaner, get more efficient, and more competitive.
Yeah, my point about Lufthansa was more like in general. Do you agree with rescuing companies like that? But you answer the question that you're against that. Yeah.
No, I don't. But again, when the point, it's a very thin line, but it's the most important line. You have made a very good question. One thing is to say that you're against and that bailouts don't work because they perpetuate overcapacity. They keep companies from being efficient. They keep the machinery of creative destruction from generating progress. They zombify the economy, many things. Okay, that is true. Now, what is absolutely untrue, and it's empirically untrue, is that policy has been against robbing or taking money out from SMEs or citizens. Citizens may not have benefited from that, but you go today to ask for a mortgage, or you go today to ask for a loan, in Holland, in Spain, anywhere. Today in Spain, with the 26% unemployment, you want to get a mortgage, you will pay for a 40-year mortgage 1.5%. That has never happened. So
Yeah.
you see what I mean?
Yeah, but in
So
winners, there's losers. Like if I spoke to a student the other day, or someone who just entered the job market, and that person can buy a house because house prices have, like you also argued earlier,
that's
house
not, but
prices
again,
have gone.
you see,
So there are winners, there's
this is an
losers.
important factor. This is an important factor because yes, that person cannot buy a house, okay? May not be able to buy a house today, okay? It doesn't mean that they were able to buy a house 20 years ago. The first mortgage I got when I was a kid, my parents had to help me because I could not.
I was able 15 years ago to buy a house in Amsterdam with just a start income.
You were able 15 years ago because of what? Because in 15 years ago, not because of monetary policy. It's a great answer. It's a great example. 15 years ago, monetary policy was massively accommodative.
But not as much as today, right?
No. The monetary policy 15 years ago, the reason why you had access to credit with just a startup income was precisely because of monstrously expansionary monetary policy. That's why you got a loan. So did I. No, I'm not saying.
It's also a very small house, by the way. So
doesn't matter. No, hey. But what I'm trying to say is, I'm not. Yeah. It's super important what you're saying, and I really, really like this discussion because you're pointing out to a huge misconception, which is you can and you should be against these policies that generate numerous collateral damages and very, very big problems, okay? But you cannot say that that has been robbing somebody of something that they had. Robbing is something that is very evident and tangible. I have this phone, you take it, you have robbed. No, this has not been robbery. No, and this is an important, very important factor. And why is it an important factor? Because of the consequence. Imagine that you and I collectively, we run the European Union and we decide wrongly that this has been robbery and that what we need to do is play Robin Hood and give it back to those that were not robbed and that did not suffer at all. Actually got
they're robbed from the future maybe, but that's more of a conceptual thing then. But
doesn't matter. The key mistake that we can make about all these things is to start from a false premise, because if you start from a false premise, you get to a false solution. The false solution would be then that you say, the entire solution is to go to the people that are rich and take their wealth and divide it between the people. Wouldn't it be great?
Yeah, but it depends on how the rich got their wealth. And further, I guess my point is, if in a pure capitalist society,
But how do you decide? How do you decide when and where the rich got their wealth unjustified?
That's a tough one. That's a tough one, of course.
No, let me start with you. For example, you 15 years ago could get yourself this fantastic apartment in the center of Amsterdam with a startup. So your wealth has risen dramatically in the last 15 years. That is a fact. Do I come to you and say that you got your wealth undeservedly? No, because it's not true. Do I go to somebody that was intelligent enough to put his or her savings in the equity market in 2009 because they saw that the equity markets were going to go up and now they have more wealth? No, I don't. Even less so, what I don't do is if I find that process unfair in some form, what I never do is to go to you and say, and by the way, all the wealth that you've created in the last 15 years, give it to me because I'm going to share it with the people.
Yeah, so basically people should stop complaining and focus on how can we fix things in order to make the future
because you don't
more
fix
equitable.
Things through envy. You don't fix things through envy. We've already remember the history of Europe. The history of Europe has been the fabulous example of the disaster of fixing things through envy. The French Revolution decided to confiscate the wealth of the church. What happened? That it destroyed completely the economy and then ended up with a dictatorship. Be very careful with what we need to do is, okay, fair enough, this didn't work. It's true that there have been benefits for all of us. Absolutely, there have been. My kids have access to university at much lower prices. My kids are going to go to Holland to study university, and they're going to pay an absolutely ridiculous figure of rent in order to do that. But there are benefits, or there have been benefits. I'm not saying, but what you cannot do is ignore all the collateral damages. Furthermore, all the rising collateral damages. Second, do what central banks are doing, which is to look at the rearview mirror and say, oh, things have not been broken, therefore accelerate. That to me is wrong. Third, is to try to go back in history and decide, even worse so, from a government perspective, who wins and who loses. If I should confiscate your wealth because 15 years ago you bought yourself a tremendous apartment in Amsterdam.
I can let your son or daughter rent a room for a very small price then as a compensation.
There you go. There you go. That's another benefit.
No, it's a good point you make.
That's another benefit for you. Huh?
Maybe let's spend a few more minutes before we wrap up then about the future of the euro, because clearly mistakes have been made, but we need to have a positive outlook on how we can fix things. Do you believe the Eurozone has a future, or do you believe we should go back to other currency arrangements, such as national currencies or possibly coalitions between certain countries, or maybe completely free markets which just all use Bitcoin, gold, whatever? What's your take on that?
There is a reason why, despite all of the challenges of the Eurozone, the support for the euro within the countries is enormous, even in Italy. Huge.
In Spain too? Is there support for the euro
massive,
still? Massive. Yeah.
Massive support for the euro. Why there is massive support for the euro? People are not stupid. People don't have amnesia. Even if you are young, you know that the euro's purchasing power, the euro as a currency, is a strong currency. I always ask people, what do you want to work for? You want to work for weak currency or a strong currency? Because that's what you do. It's what do you want to work for? You want to work to get a strong currency or a weak currency. And people know that the euro, with all of these challenges, is a strong currency. It is a strong currency for one simple reason, because of history. Because the history of local currencies in the European history, in the all of European history, has been one of constant destruction of the purchasing power of the local currency. The history of Europe and all of its military and civil conflicts can be traced back to monetary imbalances, hyperinflations, huge monetary monster decisions that then created massive poverty and then dictatorships, etc. You can go back to almost any event in Europe to understand why there's such a support for the euro.
But the Deutsche Mark and the Dutch guilder, of course, were solid currencies the few decades before the euro was introduced. Don't you fear that the Dutch and the Germans are going to say, look, this euro is going to be resembling too much the franc or the peseta, and we might as well step out?
Oh, but that is precisely the good thing about the euro, is that it's not decided by the Germans or the Spaniards. The Spaniards or the Italians may want the euro you may want to use the currency like the Argentinians or the Venezuelans or the people in all the governments that destroy the purchasing power of the currency want to, but they can't. And the Germans might want the euro to be stronger, and they can't either. The reality is that it's the beauty, if anything, of the euro is that it's not decided by one single government. That is a good thing.
Or one size fits none.
one size fits none. I'm not entirely sure if that applies to monetary policy. I think that it's the opposite. In monetary history, one size actually does fit most. It's the US dollar. It's the opposite. If you look at why citizens all over the world, in Africa, in Asia, in Latin America, prefer to have their savings in dollars than their local currency, is because one size does fit most, even with all of the challenges of the US dollar. But it is true that the the interaction between northern and southern countries in Europe and the interaction between West and East, people tend to forget about that difference of opinions. It's extremely important to continue to keep the euro alive. If the Eurozone and the ECB started to go crazy with monetary policy, they would destroy the euro in the long term. That is absolutely true. That's why the influence of Holland, of Finland, of Germany, of Luxembourg is so important. If the ECB was too tight and sent over and over to massive Greek type of problems to the southern countries, then it will also be in danger. So it's a thin balance. It has to be maintained in a certain way. But the support for the euro remains very high. Now think about, for example, right now, if the euro broke up. If the euro broke up today, what would happen to the Deutschmark? The Deutschmark would probably go up 20, 30% relative to the rest of the currencies. No, what do you mean 20, 30%? The Deutschmark would probably go up 55, 60% relative to the rest of the currencies, which would obliterate the German economy very quickly. That is true. What would happen again to the Dutch guilder? Pretty much the same. No? So, and what would happen with the Spanish peseta and the Italian lira? That they would collapse. That they would collapse to Argentine levels, which would also destroy their economy.
But it would solve their debt problem.
No, they would. No, it wouldn't, because your debt is denominated in euros.
But if they use Lex Monetae, they can just use their own. They can just convert it into their own
redenomination. So you mean that you have today 1.2 trillion euros of debt, case of Spain. You redenominate it to pesetas. What happens to the bank? No. What happens to the banking system of the world?
Yeah, that's the problem. We don't know, and I think that's why the euro.
I do. A depression.
Yeah.
It generates a massive depression. If the Eurozone today went into local currencies, you would have redenomination on each country's debt to the local currency. What you would have would be a depression, the domino effect. Remember one thing, the debt of Eurozone countries today is redenominated to Daniels or to pesetas or something like that. It's a depression, but not a depression in a 1929 way, in unheard of. And it would be a depression, furthermore, for the Dutch, German, French banks that have masses of Italian, Spanish, etc. debt in euros. So there is a quid pro quo. What I'm trying to say about the euro is that is a quid pro quo, and it's very important in that quid pro quo that Germany, Holland, Finland, it doesn't matter. That the countries that want to pursue a sound monetary policy continue to influence that way. And it's also an important factor that it remains relatively flexible. But so in order not to create a constant type of Brexit out of the European Union, I personally think that there's more benefits than negatives.
Okay, that's interesting. So you're in favor of trying to make it work still, the euro?
Well, not trying to make it work. I think it is working.
Keep on making it work. Right. Also in the future for our kids and beyond.
Yeah, well, the future for our kids is very simple. I'll tell you. I'm a Spanish citizen. Do I want my kids to have their salaries in pesetas, in dollars, or in euros? Definitely not in pesetas. I can tell you. The Greek, I had this conversation with Yanis Varoufakis. Yanis Varoufakis went for an hour saying that all of the problems of Greece came from the euro. And I said, so why there's no secondary market demand for drachmas? Because there's none. It doesn't exist. It's that Greek citizens don't want drachmas. You cannot even impose it. You cannot even impose it. You cannot even go to the Greek citizens and tell them on a Friday that all banks are closed and that on Monday they will get drachmas. Because on Monday, when the banks open, will they do? They will go immediately to sell those drachmas at any price to anyone to get gold or to get dollars. It's Argentina.
Yeah, interesting point. Yeah, there's so many more things I could discuss with you, but I know I've already been using up quite a bit of your time. Any other things you wanted to say, or maybe how can people reach you? How can people where can people buy your books?
Thank you. My books are available all at Amazon. You can find them in English and Spanish, and also in Chinese if you're interested. You can also reach me in my website. It's www.dlacalle.com, and you can also find me on Twitter at DLACALLE_IA. It's not difficult to find me.
I'll put them all in the show notes anyway. And you're a very active Twitterer, so I would advise anyone to follow you.
And you also have you can also follow my YouTube channel. In my YouTube channel, I have a few videos about all these things that might help you understand it a little bit better. So all of those things are available to you.
Bueno, Daniel, ha sido un gran placer hablar contigo y ojalá hablemos otra vez en el futuro.
Same here. Absolute pleasure.
Have a good day.
Great day.
Thanks. Bye.